All right, let's take a look at what's going on. So GME tips are starting to flatten out and contract. If we go down to the 1 hour, we can see that they're pulling back towards each other in the dying run fashion. Still a long way to go to the downside and a lot of short puts that need to fall off, but definitely declining, at least for now. It may keep the trend over time, but we'll have to see. Tomorrow's T5, Monday's T6 from the bigger parts of the run, so there is some possibility that we still get some volume here. I don't know if it'll be enough to recover the Vegas squeeze. I think that's pretty much too far out of reach now, but we could bounce back to like 34 or 40 one more time before this fully capitulates. I wouldn't say it's completely dead yet, but it is very slowly dying, and it has to. It can't die quickly because otherwise if they tried to crash the price back down to like $10 overnight, right? IV would skyrocket, and all of that Vega exposure would need to be hedged. So that's actually not an option, right? It has to be like laid to rest slowly. Otherwise they get the opposite reaction, which happened in February following the like the squeeze in January of 2021, right? They kind of shorted way too hard and they spiked the vol, and IV stayed really elevated, and then the MM fucking hedged back all of that delta as IV spiked. So yeah, definitely a possibility that it can still turn around because of that mechanic. But right now it is starting to bleed off, and it's starting to get over that kind of hump of gamma that's been protecting our downside. And if they can softly get us over that without spiking vol, right, and we get back below that $25 level, then the MM can just dump Vega and gamma willy nilly, and with almost no repercussions. Upstart pulled back today. Looks like it's about done running too. Fubo's just getting shorted. Top isn't really pulling back very much, and that's kind of interesting. Um, that may still have some juice left in it, actually. I don't know if it does, but it might. It's weird that it's not contracting quickly, especially with such a small float. Beyond kind of looks the same. It's failing the trends. I think there's enough covering there, or at least enough short vol coming in that we're not likely to run again until maybe the ETF FTD period. So I would just look for that. It'll have some volatile spikes on days that have more forced covering than other days, but I mean, you can try to play that. I don't like to. GoEV had a pretty nice day today, and it didn't run with the rest of the memes, right? The tips sort of kind of like crossed over back and forth a little bit, but it really hasn't run very hard. So there's still some opportunity on this to have its day in the sun, and that may come post OPEX. It did pull back up towards the $3 strike today, so that short put selling is pressuring the MM up, right? And if they pressure them up enough, they could start to push them through those $3, $3.50, $4 sold calls, and it could get a little bit of momentum behind it. So this one's looking kind of interesting still. May look better post OPEX as some of those short vol positions fall off. Um, is there anything else really interesting today? I mean, SPX was kind of weird. A little bit of de-risking. We are in the SLD period, but generally, when we're this high above gamma neutral, that de-risking is better supported by the market maker. We really didn't see that today. That may be just because bulls were already so over leveraged that they can't really leverage up every one of these drops in order to protect their positioning. And we got a lot of out of the money bullish positioning that fell off today, right? Like just way too over exuberant, 52, 30, 35, 40, 45, 50. And we got a lot of profit taking on the in the money shorter dated calls as well because the volatility was picking up. So I don't think this is indicative of anything. It doesn't necessarily mean we're going to get a lot of downside out of it or something like that. But it is a failure of the high test. And it could get a continuation tomorrow, especially if we open below 5,300, because that's going to be a big chunk of tomorrow's expiring options. That delta and charm, that's going to be working against spot, right? And so if we open below 5,300, bulls are going to have to fight back against that charm decay all fucking day, which they kind of had to in the second part of today. And it's not going well for them. And that gets even worse if we fall below 52.75. So keep those two levels in mind when trading tomorrow. It's going to be pretty important. And trading rejections might be more beneficial than trying to trade bounces if we're in a negative charm situation like that. ES fell back through the all-time high, pretty quickly approaching the 53.13 level. This doesn't really turn bearish unless we lose 5,300. So still quite a bit of a move to the downside for us to fail this breakout, and get a bearish reversal. So I'm not too worried about that right now unless it sells off really hard overnight. Commodities up a little bit today, 30 BPS. Yields actually recovered quite nicely today, as did the dollar. Seems like mostly on the back of the yen dropping and a little bit of weakness in the euro and the pound. But also just a bit higher demand for volatility. Correlation on the 3-month kind of flattened out today, so they weren't really pushing the dispersion very hard on the longer dated volatility positions, but still pushing very hard against the short term ones. And that's it's not uncommon for 3-month, like that 3-month dispersion to stall out, or the 90 days compared to the 30-day. The JPY carry trade leveraged up really fucking hard today, from 800% up to 825. So big move there actually, and the inversion in the yield curve tightened up quite a bit. We aren't seeing that effect yet on the forward yield of volatility, but you can see it's picking up like a lot of chop, and starting to contract. So if financial conditions do tighten, which they should, because inflation is fucking sky high, then there's a chance that this whole thing, this whole run to the upside, starts to reverse itself on a more significant scale. Bond vols not really relevant. Tail risk hedging still coming off, but really not at a very fast pace. It seems like most of the tail risk hedging that's falling off is in very small increments. So a lot of institutions still holding on to that tail risk hedge. 76.34% of the S&P over its 20-day moving average, and actually a little bit of positive correlation coming in today between cash VIX and VIX futures, moving back below -45 to -44.99. Not a big move in positive correlation, but a move the opposite direction nonetheless. And actually, a lot of the points that we were pricing in yesterday on the big move up getting priced out. So we got Fed Fund futures now pricing in 35 points of cuts, which is roughly our kind of our average over the last couple of weeks since the FOMC meeting. And I think a lot of this on the back of today's data, which really was mixed, but not very good if you combine it with yesterday's terrible inflation print and the fact that Japan is hurtling into a deep recession. I didn't mention that today much, but I mentioned it last night a little bit. Japan's annualized growth rate is projected at -2%, and their one preliminary GDP at negative 0.5, which is fucking terrible. Despite that, the yen actually went up last night, and I think that was action, more FX action, being yen intervention from the Ministry of Finance. But obviously that could send their currency spiraling even harder. Um, Building permits today missed, and so that's that means less supply coming online, especially this period, right? This period for housing supply is very important for mid to end of year housing inflation, right? So if you think about when people generally rent, most people that are moving to somewhere new or renting a property are moving between, midsummer, well, let's say early summer to like early fall, right? The vast majority of those people being like families with children, right? And they have kids that are switching schools, and you also have young adults that are moving to new places to attend schools, right? And so that's the big majority of the people moving during that period. And if housing supply dwindles in the spring, that means there's going to be less supply available for when the demand picks up into the back half of summer. And so what you end up with is a little bit higher inflation expectations for housing, because there's going to be simply less supply coming online by end of summer. Has anyone ever had their rent decrease while they're living in their current place? Yeah, I told a landlord one time I was moving after he offered to increase my rent, but it was like a 10% bump, and I was like, I'm gonna leave. And then he put the place up for rent for like 20 days and had zero takers. And then he was like, all right, listen, I'll cut your rent by 500 if you stay. I still left, but he did offer. Thanks, username face. Wait, what? I can do that? No, no, it wasn't common, but it was just like a private landlord. That'll never happen with a management company or something. He just realized he wasn't going to get like another renter. This was around like 2009, 2010. So that's why, as the market was just dead. I think he went out to go rent the place and realized I was already paying more than like the average market price, which I knew, and that's why I wanted to move. No, I don't rent my house out. I didn't cover cat, but I could. So cat opened below risk today. I didn't really want to take a position because of that. I'm kind of waiting to see what happens here around the trend line. I tried to enter a position towards the end of the day. It does look like it filled. And cat did drop a little bit in after hours, but I think there's decent support at 50. So I'm going to take a small chance that it gets moved back up tomorrow, at least in the early part of the day. That might not happen, but whatever. Can you cover EPAM as well? It looks interesting at 190. I have a bunch of calls on it. If anything worsens with the Ukraine-Russia war, it'll probably go down. Much of its decline in price is due to that risk being priced in. Anyway, thank you guys so much. I'll have write-ups out tonight for everybody. I'll try to remember to cover all of the memes and everything. Thank you so much, and have a great night, everybody. Later.